Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only, and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, since posting the outside range day and cutting through the 60-day moving average around the level, if I just click on there, you see at 73.90, the market is still idling or consolidating around this region after this doji posted overnight. It is assessed that although we saw a little bit of weakness in the US dollar overnight, that the market is likely to foul towards its topside challenge. However, if we do see a close above 74 cents New York tomorrow morning, then that may actually trigger a short squeeze back up towards the recent highs, seen somewhere around 74.45.65. But not quite getting the confirmation as of yet from the midway point until we get the close of New York. Let's see if the rejection from close to around this 85 or 74 cents and look back towards the downside, which holds towards 73.35 and then 72.80. As I mentioned, the US dollar, which measures the greenback strength against a basket of six major currencies, displays a slight pullback after its 3-day upward trek. From what I can ascertain is that the market it most probably see the US dollar gain further, but it needs to close above 92.80. Therefore, if we see that close above 92.80, 85, that is, then we may see a further initiate a further move down for the euro towards its objective. Firstly at 118.10, 117.60, and then beneath there around 116.75. We're holding to a negative bias when you're looking at the RSI, but the MACD has weakened slightly. So let's see how the market plays into Friday's session. The dollar yen, as you can see, got into that supply zone and was ambushed by the bears and sent the market spiraling lower. With the RSI negative now, the market looks back towards the bottom side of the range, which is seen around 108.70.90, with the immediate target seen around 109.55. Any advances should continue to see supply around this highlighted yellow, and therefore expect another failure towards the top side. With much talk of hawkishness from the Bank of England, the pound first of all displayed a bearish hammer and then followed by a relatively bullish candle, and now looks back towards the top side of the range around 138.80, which was previously contested. Now we do see a break above there, and with some of the sentiment coming back slightly positive, especially with the RSI, may see a squeeze up to 139.50. But let's see how the market plays into tonight and see if the level at 138.80 can be broken or rejected. That would mean sterling yen will put pressure back on this top side level of 152.30.40. After many attempts there, the market is still struggling, but showing determination. And the reason behind that is the midway point was rejected yesterday after this long-legged doji. A break above 152.30.40 would see a squeeze up to 153.05 or maybe up to 153.70. But before we get that call, let's see how we first of all see if the sterling can actually rally further. Looking at gold, the market is still holding beneath the 1,800 handle as investors continue to weigh uncertainty over the US central bank tapering and the economic recovery in the US due to the COVID Delta variant. Alongside that, Thursday's better than expected reading of the US weekly jobless claims did put a little bit of uptake for investors, as the number of Americans who applied for first-time unemployment benefits, a metric seen as a proxy for layoffs, fell to 310,000 in the week ending in September 4, marking the lowest pandemic. That is, and therefore the markets now are in a mixed holding pattern until we get some clarity from the US Federal Reserve when they meet up for their 2-day talk, that is on rate decision on the 21st and 22nd of this month. However, disappointing US August payrolls report last Friday may see the US Federal Reserve push back any consideration of scaling back its asset purchase. Nevertheless, I still feel that around 1,800 will contain, and with the indicator and the MACDs and the other side that is broken down could see further weakness towards its objective that I'm holding at 1,770. And we got a bearish outside range day after a brief test to the top side yesterday, which now awaits confirmation. A break beneath 67.40, that is $67.40, would see further risk and then look towards this target that I was calling earlier, which is around 66.5, and reassess from there. Well, that wraps it for today. Thank you very much for joining me. And as always, look out for the intraday report, and hope you enjoy the day and a great start to the new weekend.